Today's video, we will be covering how to file your income tax return. Filing your taxes every year isn't fun, but it's a necessary thing to do to keep on top of your finances and to stay in good graces with the IRS. Today's video, we are going to be covering what you need to do in order to prepare and file your individual income tax return with the IRS. Currently, there are two versions of the 1040 tax return. There's the regular Form 1040 and Form 1040 SR, which is for senior citizens. There are several schedules or forms that may need to be attached to your Form 1040, especially if you are subject to certain taxes or want to claim particular tax breaks. What is the Form 1040? Well, it is the U.S. Individual Income Tax Return. It's a standard federal income tax form that every individual needs to report their annual income to the IRS. There are quite a few different ways to obtain the Form 1040. You can download it from the irs.gov website directly to your computer. You can also get a paper version of the Form 1040 from a post office or a local public library around tax season. You can pick it up from a tax center or an IRS office, and you can also request that the IRS send you the form through U.S. mail. The Form 1040 with payment is typically due by April 15th, when taxes are due. This may change if the date falls on a legal holiday or a weekend, in which case the filing deadline would be moved to the next business day. The IRS may grant a 6-month tax extension for late filing. However, you need to request this with an IRS tax form 4868. All payments must still be made by the original due date, typically April 15th. In order to fill out your Form 1040, you'll need multiple pieces of documentation. This includes proof of ID, such as a driver's license or passport, your proof of filing and residency status, your social security number, as well as that of your spouse or any dependents that you may have. You'll also need to have your date of birth, your spouse's date of birth, and the date of birth of all dependents. It's also very advisable to have a copy of your past year tax return for reference, and any statement of wages earned, such as a W-2, a W-2G, a 1099-R, etc. You should also have available statements of interest or dividends from banks or brokerages, proof of tax credits, tax deductions, or tax exclusions, and your bank account and routing number for the tax return direct deposit. Now that you have all your documents, let's get into filling out your Form 1040. Starting from the very top line of your Form 1040, we're going to begin with your filing status. There are 5 federal filing statuses at the top of your tax return, and you should check one off. These filing statuses are single, married filing separately, married filing jointly, head of household, qualified widower with dependent child. All of these filing statuses are based on your marital status and a few other conditions. You may qualify for more than one filing status, but you should only make a single choice. Choose the filing status that will result in the lowest taxes owed for you. Next up, we have to fill out the name, address, and social security number section. Note that if you have a missing or incorrect social security number, it may result in slower tax return processing, increased taxes, delayed tax refunds, or even reduced tax refunds, so make sure your documentation is correct. If you are a resident or non-resident alien, you should provide your individual taxpayer identification number, your ITIN, wherever your social security number is requested. For more information about the individual taxpayer identification number, refer to our other video. The next section on the form is digital assets. This refers to virtual currencies such as crypto. This section asks at any time in 2022 if you received, sold, exchanged, gifted, or disposed of any digital asset. Check yes only if you made one of these transactions with your crypto or virtual currency. You can check no if you only bought a virtual currency and made no transaction. For more information, you can refer to our other video, Cryptocurrency and Taxes, on what information you may need to share with the IRS regarding your cryptocurrency transactions. Next up is the standard deduction section. There are 2 main types of tax deductions, standard deductions or itemized deductions. You are allowed to claim one type of these deductions on your tax return. However, you can't claim both. If you claim a standard deduction, you cannot itemize, and vice versa. If you itemized deductions, you can't claim the standard deduction. You are allowed to choose whichever deduction results in the lowest taxes owed for you. Your standard deduction is subtracted from your adjusted gross income, AGI, in order to reduce your overall taxable income. For tax year 2022, the standard deduction amounts are as follows. For single filers and married couples filing separately, it comes to $12,950. For married couples filing jointly or qualified widows, it comes to $25,900. And for head of household filers, it comes to $19,400. In the standard deduction section, check off if anyone can claim you as a dependent, your spouse as a dependent, or if your spouse itemizes on a separate return, or you are dual status alien. There is also a section in the standard deduction area for blind individuals or spouses. Make sure to check off if you were born before January 2, 1958 and are blind, or if your spouse was born before January 2, 1958 and is blind. The following section is for your dependents. This form allows you to enter up to 4 dependents. If you have over 4 qualified dependents, you're going to need to add another page to your return. All of the personal exemption amounts have been eliminated for tax years 2018 through 2025, so the personal exemption section has been removed from the 1040 return altogether. If your dependent qualifies for the child tax credit, you should check the corresponding box. If your dependent doesn't qualify for the child tax credit, they may still qualify you for the new credit for other dependents. Coming up next is the taxable income section. According to the IRS, income is any money you receive during the given tax year. Be sure to review your W-2, wage and tax statements to determine your annual income. Your taxable income is the gross income of yourself or a corporation, subtracting any allowable tax deductions. Note that taxable income can encompass more than just your annual salary, including profits from stocks or real estate sales, winnings from the lottery, betting on races, or any casino, be it domestic or abroad, and also the cash value of bartered items. All of these will also need to be reported as taxable income on your 1040. Income that is part of your gross income but not taxable includes child support, proceeds from life insurance policies, inheritances, workers' compensation benefits, welfare benefits, compensation awarded as a result of physical injury, education scholarships or grants, and income paid to your retirement account, such as your 401k or IRA, up to a certain threshold. Now, taxable income is a portion of your gross income subject to taxation by the government, minus allowable itemized or standard deductions. Your taxable income is essentially the amount of your income subject to tax. For more information, see IRS Publication 525, Taxable and Non-Taxable Income. It is required by law that you report all forms of income to the IRS, except income that is exempt from tax by law. On line 1 of your Form 1040, enter the total amount of your wages, salaries, tips, and other taxable income. If you're married and filing a joint tax return, you must also include your spouse's income. Now, let's get into the Adjusted Gross Income, or AGI, section of your Form 1040. Your AGI is the gross or total income from all taxable sources of income minus certain allowable tax deductions, also known as above-the-line deductions. These include unreimbursed business expenses, medical expenses, alimony, moving expenses, and deductible retirement plan contributions. Your AGI determines your overall tax liability. It can affect which income tax bracket you're in, how much you can contribute to qualified retirement accounts, and which tax credits you can qualify for. Your gross income refers to all income you received in the form of money, goods, property, and services not exempt from tax. This can include any income that is from outside of the US, as well as income from the sale of your home. When filling out your Form 1040, there is a section for tax deductions and tax credits. Be sure to take advantage of any tax credits or deductions you qualify for. Your tax deductions reduce your taxable income. Tax credits reduce the actual amount of tax you owe. Both of these can increase your chance of receiving a tax refund. Make sure you understand how to properly claim any tax benefits, however, as mistakes will delay processing your return. Tax deductions will lower your taxable income and are equal to the percentage of your marginal tax bracket. For example, if you are in the 25% tax bracket, a $1,000 deduction saves you $250 in tax. Multiply the $1,000 by 0.25, 25%, to get $250. Tax credits, on the other hand, provide a dollar-for-dollar reduction of your income tax liability. For example, a $1,000 tax credit will actually save you $1,000 in taxes. Tax credits are always worth more than a dollar equivalent tax deduction because deductions are calculated using percentages. So, referring to these two examples, you can see a $1,000 credit offers you $750 more in savings than a $1,000 deduction. You can report your tax credits and deductions between lines 16 and 24 on your Form 1040. Line 25 indicates your federal income tax withheld. Withholding tax, also known as payroll withholding, is essentially income tax that is withheld from your wages and sent directly to the IRS by your employer. It's kind of like a credit against income taxes that you must pay for the year. By subtracting these withholdings from each paycheck you receive, the IRS basically holds your anticipated tax payment as you earn it, sometimes called pay-as-you-earn taxation. While you can't avoid withholding tax altogether, you can control the amount that's withheld from each of your paychecks when you fill out your Form W-4. Line 26 of your 1040 shows estimated tax. This is the method individuals and businesses use to pay tax on income that's not subject to withholding. So examples of this may include income from self-employment, interest, dividends, alimony, rent, or capital gains from sale of assets, prizes, and awards. You may also have to pay estimated tax if the amount of your income tax withheld from your paychecks, such as salary, pension, or other income, is not enough. Your estimated tax payments are made in quarterly installments using the IRS Form 1040-ES, which can be filed electronically or by paper mail. The next section is the Earned Income Credit, or EIC, also known as Earned Income Tax Credit. The EIC was created to help lower-income workers, self-employed individuals, and their families. It's used by more and more taxpayers than ever as a means to offset their loss or reduction of income, especially in terms of crises like the COVID-19 pandemic. Listing your EIC can result in a tax credit to offset any income tax due or help you get a tax refund. Jumping down to line 34, we are going to look at the refund section of your Form 1040. A tax refund is issued when the amount of income tax you paid was more than what you actually owed for that year. The IRS actually has an electronic system in place called Where's My Refund, which is an online tool that helps you determine the status of your tax refund using the internet. If you filed your taxes electronically, you'll receive information about your refund within 72 hours after the IRS acknowledges receipt of your e-filed return. However, if you file by paper mail, it will take the IRS longer to process your tax return, and you won't be able to use the Where's My Refund online tool for about 3 weeks. Once you are done filling out your Form 1040, you'll know how much taxes you owe or how much of a refund you should receive. After your return is prepared, you have many different options to pay your federal income taxes if applicable. You can pay electronically, online, via credit card, debit card, or electronic check. You can also pay by phone by contacting the IRS. You can pay by paper mail with a check, money order, or cashier's check, and you can also pay in cash, although this is less frequently used. Now, what happens if you file your taxes late? The IRS urges taxpayers to still pay your bill in full, or as much of what you owe as you can, and as soon as you can. The longer you wait, the more late fees and interest will accrue on your overdue taxes. Now, if you can't fully pay the amount due with your income tax return, you can ask the IRS if they will allow you to make monthly installment payments for a full or partial amount. Keep in mind, you still may be charged interest and also possibly late payment penalties on the taxes not paid by the date your return is due, even if your request to pay installments is granted. On line 38 of your 1040, estimated tax penalty, you should fill it out if you didn't pay enough estimated taxes by your IRS due dates. The last sections of your Form 1040 are for you to finalize your return. By checking the box in the third-party designee section, you authorize another person, such as a tax preparer, family member, friend, to discuss your tax return with the IRS. Just note, you are not authorizing this designee to receive your refund, bind you to anything, or represent you before the IRS. Make sure to also sign your return to validate your 1040. If you are filing a joint tax return, your spouse must also sign the return. Make sure to also gather all appropriate documents, your 1040, plus any attachments or schedules needed to file, and put them together. Finally, you can file your Form 1040 by mail, IRS e-file, or through your approved tax preparer. It's advisable to file your taxes online because it's faster, easier, and more secure. Plus, you'll get your tax refund much sooner if you choose the direct deposit option. There are 3 main ways to file your Form 1040: paper filing, tax preparation softwares, or hiring a professional. We're going to cover the pros and cons of these 3 different methods. Using a tax software such as eFile or QuickBooks has become increasingly popular in recent years. The pros of using a tax software are that they often have answers to frequently asked tax questions within the interface. The software is also built to help you take advantage of as many deductions and credits as possible. One of the cons is that you could fill it out incorrectly and may need to revise your return later. If you choose to go with a tax professional, this cuts out a lot of the guesswork. You have somebody who is well versed with tax law and finances to help you out. They'll also ensure that your tax return is accurate and will save you as much money as possible on any taxes owed. One of the cons is that you have to pass full and complete control to this tax professional, and you will have to pay for their services, although for simple returns it is very often well worth it. Lastly, for traditional paper filing, you are in charge of every detail from start to finish. So if you are very meticulous with your bookkeeping and want control over your return, this would be the way to go. However, there is no immediate tax help available if you are doing a traditional paper file, unless you look up the answers online. Now, let's compare if you should traditionally mail your tax return or e-file it. Paper tax returns, of course, need to be mailed to the IRS upon completion. Returns that are prepared through a tax advisor or tax software can be mailed or sent via electronic filing. Usually, tax returns that are submitted electronically are processed faster, which of course means a faster tax refund for you. It's also just generally easier to e-file, and it ensures that your return won't get lost in the mail, which happens more often than not. I hope this video helped you understand the minutiae of filling out a Form 1040 and what exactly you need to get it done.